everyone. We have prepared latest market updates for March 14th, 2023. Credit Suisse notes issues in financial reporting. Credit Suisse released its delayed annual report Tuesday, revealing significant weaknesses in its internal controls over financial reporting and saying it has so far failed to stem customer outflows. The bank's string of scandals resulted in customer outflows exceeding 110 billion Swiss francs, $120 billion in the fourth quarter, causing some liquidity buffers to the breached. Chief Executive Officer Ulrich Körner said at the World Economic Forum in Davos, Switzerland, in January that the bank was seeing a return of money to various parts of the company. The bank said Tuesday that outflows have stabilized to much lower levels but have not yet reversed. The bank's share price fell more than 14% to a record low on Monday amid market turmoil caused by the collapse of U.S. lenders Silicon Valley Bank and Signature Bank. On the same day, Swiss regulator FINMA warned that it was seeking to identify any potential contagion risks to the country's banks and insurers after the U.S. bank collapse. USDC unpacks but not about to collapse. Last week, investors were understandably disturbed by the news that billions of dollars secure in USD coin, the second largest stablecoin, had been locked up at troubled Silicon Valley Bank, SVB. The market reacted violently, causing USDC to lose its peg to the dollar. But while the concern was understandable, it was clear that USDC's creator, Circle, would restore full access to its funds. Circle is the issuer of the USDC stablecoin, which is 100% backed by fiat. On Saturday, the company released a statement confirming that $3.3 billion on the $40 billion used to back USDC is held at a Silicon Valley bank. Instead of reassuring investors that the bulk of Circle's funds were safe, the revelation had the opposite effect. Confidence in the USDC was shaken, and the stablecoin, which had held firmly to its $1 peg for 4 years of its life, began to fall. Over the weekend, the one stable token fell to a low of $0.88 as traders tried to assess that USDC was under-collateralized. As of March 13th, USDC had recovered to a range between $0.99 and $1.01. Gold prices hold high in anticipation of CPI data. Gold prices hit a near 6-week high on Tuesday as worries about the U.S. banking crisis led investors to seek traditional safe havens, and now attention has shifted to upcoming inflation data for additional monetary policy hints. Spot gold was unchanged at $1,913.76 an ounce, and gold futures rose 0.1% to $1,918.75 an ounce. Both instruments traded near their highest level of the year. Yellow metal prices rose more than $100 in the past 5 days as the closures of 3 U.S. banks, most notably Silicon Valley Bank, underscored the growing cracks in the U.S. economy caused by a sharp rise in interest rates over the past year. The prospect of a banking crisis also spurred bets that the Federal Reserve would be forced to soften its hawkish stance to prevent further destruction of the economy. This had a strong impact on the dollar and short-term Treasury bond yields, which in turn benefited gold.